How Donald Trump used unusual financial documents to exaggerate his wealth and hide some of his debt. When Donald Trump wanted to make a good impression on a lender, a business partner, or a journalist he sometimes sent them official-looking documents called statements of financial condition. These documents sometimes ran up to 20 pages. They were full of numbers, but, for someone trying to get a true picture of Trump's net worth, the documents were deeply flawed. Some simply for instance, Trump's financial statement for 2011 said he had 55 home lots to sell at his golf course in Southern California. Those lots would sell, but Trump had only 31 lots zoned and ready for sale at the course, according to city records. He claimed credit. He also claimed his Virginia vineyard had 2,000 acres, when it really has about 1,200. He said Trump gives incorrect number of home lots in California. Adds 10 stories to Trump Tower. Now, investigators on Capitol Hill and in New York are homing in on these unusual documents in an apparent attempt to determine whether Trump's familiar habit of bragging about his wealth ever crossed a line into fraud. The statements are at the center of at least two of the inquiries that continue to follow Trump, unaffected by the end of Special Counsel Robert S. Mueller's investigation. On Wednesday, and earlier this month, the New York State Department of Financial Services subpoenaed records from Trump's longtime insurer, Aon. A person familiar. Both inquiries stemmed from testimony last month by Trump's former lawyer Michael Cohen, who told Congress that Trump had used these statements to inflate his wealth and then sent them to his lenders and his insurers. Mr. Trump is a cheat, Cohen said, in describing what the statements showed. Cohen told Congress that statements were given to Deutsche Bank, as Trump sought a loan to buy the NFL's Buffalo Bills. Since then, the statements may additionally draw the interest of the House Financial Services Committee, which is scrutinizing Deutsche. A committee the White House declined to comment for this report. The Trump Organization also declined to comment about the statements or answer questions about specific errors the statements contained. Donald Trump Jr. Mazars USA, the accounting firm, issued a brief statement Wednesday after the House oversight letter became public, saying that it believes strongly in the ethical and professional rules and regulations that govern our industry, our work, and our client interactions. It declined to The Washington Post reviewed copies of these documents for 2002, 2004, 2011, 2012, and 2013, obtaining them from court files, from people who received them from Trump's company, and from Cohen. Also, since the 1980s, Trump has defined himself by his wealth, but he has often avoided providing proof to back up his boasts or provided documents that inflated the real values. As president, Trump is far from the first real estate developer to inflate his projects or wealth. But there are laws against. How much would the errors impact an investor? Said Kyle Welch, an assistant professor of accountancy at George Washington University. If it's systematic, Welch said Trump could be protected by disclaimers that his own accountants added to the statements, warning readers that they weren't seeing the full picture. And in an odd way, Welch said had never seen a document stretch so far past the normal conventions of accounting. It's humorous, Welch said. It's a humorous. Investigators for the New York State Department of Financial Services, which sent subpoenas to Aon, and the New York State Attorney General who subpoenaed Deutsche Bank declined to comment. Aon and Deutsche. The story of Trump's statements of financial condition in essence, sales brochures for Trump the man, given out by Trump the company goes back to the early 1980s, according to past testimony from Trump's accountants and staffers. In 2007, a Trump lawyer named Michelle Loki said she had sent these statements out to Trump's lenders, for projects in Chicago and Las Vegas, because Trump had personally guaranteed those loans. That meant that, therefore they'd want information on his net worth? An attorney asked Loki. I assume, she said. The statements were prepared by Trump's longtime accountants, a firm now called Mazars. In other contexts, this was a different sort of job. When compiling these statements of financial condition, those accountants have said they did not verify or audit the figures in the statements. Instead, when in the compilation process, it is not the role of the accountant to assess the values, said Gerald J. Rosenblum, one of the accountants. The role is to an attorney asked, do the values have to be logical? The value per SE does not have to be logical, Rosenblum said. He and Loki were. In 2014, Trump used the same accounting firm to prepare financial information for his most expensive development project in decades, his $200 million transformation of the historic old post office pavilion in downtown Washington into a Trump International Hotel. But in that case, Mazars vouched for the accuracy of the information, writing that the firm is responsible for the preparation and fair presentation of these financial statements using industry-standard accounting rules. This was the statements Cohen provided to the Post-U and to Congress begin in 2011. Two of them are twin. In his testimony to Congress, Cohen said these statements included Trump's self-appraisals of his building's value which aimed to impress, instead of aiming for reality. Cohen said Trump, if you're going off of your rent roll, you go by the gross rent roll times a multiple, Cohen said. And you make up the documents begin with two-page disclaimers, warning of various ways in which the statements don't follow normal accounting rules. The accountants note, accountants warning. The accountants also note that Trump had told them to simply omit two of his major hotels, in Chicago and Las Vegas. Both buildings were. Users of this financial statement should recognize that they might reach different conclusions about the financial condition of Donald J. Trump if they had more information, the statement concludes. Legal experts interviewed by the Post said that sort of broad disclaimer might shield Trump from allegations that he misled his lenders and insurers. After all, the transparent disclaimers, even if frustrating, you typically wipe out a basis for bringing charges of fraud, said Jacob Frankel, a former federal prosecutor who is now a private attorney at Dickinson Wright. In 2012, Trump's statement said he owned a 2,000-acre vineyard in Virginia. But land records exaggerate size of vineyard. In 2011, the statements said that Trump's Seven Springs estate in Westchester County, NY, was zoned for 9 luxurious homes. In the statement, exaggerates value of Westchester County estate. At the time, Trump had received preliminary conceptual approval to build homes on the site. But local officials, none of the homes was built. The 2013 statement that Cohen provided and which he said was also given to Deutsche Bank, in pursuit of a loan to buy the bills, is different from the other two. It is just 2 pages long, with a slightly different title summary of net worth. It does not include 2 buildings are missing. This document also includes a new asset that wasn't there before. It says that Trump's brand value his name, essentially was worth $4 billion, and that it ought to be counted among his assets as if it were a building or a resort. With his brand for Trump, the bills would have been a financial prize far larger than any he had won in the recent past. Bids were expected to be around $1 billion. In public, Trump had bragged that he was ready to pay $1 billion in cash. But privately, we are looking at the bills, but Alan and I are having trouble making the numbers work, wrote Ron Lieberman, an executive vice president at the Trump Organization, in an email to a contact in the New York City Parks Department. Allen likely meant Lieberman's email was released this year in response to a public records request from a nonprofit group, New York City Park Advocates. Lieberman and Weiss, whatever Trump sent to Deutsche Bank, it seems to have been enough. The New York Times reported that Deutsche Bank for the bills, citing an unnamed executive. But Trump lost.
Raindrop, drop top, smoking, no cooking the hot pot. Fucking on your bitch, yeah, that. Looking up, open the park, pot.